This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The cost of shipping oil is likely to remain high in the first half of 2026 as the global fleet ages and a rising number of vessels are hit with Western sanctions, shipping sources say, though rates could be capped in the second half. In recent weeks, the cost of shipping oil has risen to about $130,000 a day for very large crude carriers thanks to high demand from OPEC and its allies. On top of that, the supply of available ships has been reduced because some vessels have been sanctioned for carrying oil from Iran, Russia and Venezuela, according to data and industry sources. It's a very strong market now, said Jan Rindbo, chief executive of Danish shipping group Norden.
China's crude oil throughput rose 3.9% in November, Statistics Bureau data showed on Monday, as a new batch of crude oil import quotas for independent refiners offset maintenance at some state-owned refineries. The world's largest oil producer processed 60.83 million metric tons of oil in the month, equivalent to 14.86 million barrels per day, BPD. About 1.2 million barrels of oil per day of refining capacity was offline in November for maintenance, weighing on throughput, said Muyu Zhu, senior crude oil analyst at Capella. But after independent refiners received new import quotas, their run rates rose to a high for this year of 64%, Zhu said.
Moving on to the top news in the energy sector.
Singapore's marine fuel sales in November were largely unchanged from the previous month, official data showed on Monday. Sales at the world's largest bunker hub for ships totaled 4.82 million metric tons in November, up 0.1% month-on-month, though rising 8.0% year-on-year, according to the Maritime and Port Authority of Singapore. Some aggressive selling last month dampened price premiums but led to higher sales, market sources said.
The U.S. has demanded that the European Union exempt its oil and gas from obligations under the bloc's methane emissions law on fuel imports until 2035. A U.S. government document seen by Reuters showed. Starting this year, the EU requires importers of oil and gas to Europe to monitor and report methane emissions associated with those imports, in a bid to curb emissions of the potent planet-warming gas. The world-first climate policy has faced opposition from U.S. Energy Secretary Chris Wright, who has called it impossible to implement and warned it could disrupt U.S. gas supplies to Europe. European countries have increased imports of U.S. liquefied natural gas as they phase out oil and gas from Russia. Next, we have the top news in metal markets. Copper prices rose on Monday as some traders rolled forward positions ahead of a contract expiry this week, helping the market to set aside weak data and worries about the property sector in top consumer China for now. Benchmark 3-month copper on the London Metal Exchange rose 1.4% to $11,670 per metric ton by 10:58 GMT. Copper hit a record high of $11,952 on Friday on worries about tight supply and then saw a sell-off amid renewed fears of the AI bubble bursting.
China's aluminium production rose by 2.5% to 3.79 million metric tons in November from a year earlier, according to data released by the National Bureau of Statistics on Monday. In the first 11 months of the year, China produced 41.17 million metric tons, a rise of 2.5% from the same period last year, the data showed. Production of 10 non-ferrous metals, including copper, aluminium, lead, zinc and nickel, rose 4.7% to 6.99 million metric tons from a year earlier. Year-to-date output was up 3.8% at 74.47 million metric tons. The other non-ferrous metals are tin, antimony, mercury, magnesium and titanium.
We will now look at the top news in the agricultural sector.
India rejected on Monday U.S. accusations that it is dumping rice in the United States, saying its rice exports are primarily premium-grade basmati, which typically commands higher prices than non-basmati varieties. U.S. President Donald Trump said last week that more tariffs could be imposed on Indian rice, accusing India of dumping its shipments into the US market, referring to a practice whereby a product is exported at a price lower than its normal price. We don't see a prima facie case of dumping, and as far as we know, the US has not started any anti-dumping investigation either, Indian Trade Secretary Rajesh Agrawal told a news conference.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.